So I want to talk today about Brexit and in particular its effect on free movement. Now, as you probably know, there are three main reasons why those who are in favour of Brexit are advocating for the UK to leave the EU. One, to tackle the so-called problem of immigration and access to benefits. And indeed, if you look at the Daily Express for this week, it says very clearly, migrants milking Britain's benefits. So it is extremely politically salient to have such a call. Secondly, bring UK's money back home. So if we don't no longer members of the EU, therefore we won't be paying contributions to the EU. And thirdly, to try and cut red tape, that the red tape that there is in the UK should be enacted by the British Parliament in Westminster and not by the Parliament in Brussels, Strasbourg. So what I'd like to do today is just to talk a bit about the effect of Brexit on the four freedoms: free movement of goods, persons, services and capital. And I'm going to look at those in turn and then just say something about the possible alternatives. But I'm going to start by looking at pure Brexit, i.e. UK leaves the European Union and nothing else is put in its place. What impact will that have on the four freedoms? Let's start with free movement of goods. Now, a large quantity of our trade is with the EU. Indeed, 50% of our trade in goods is with the EU. Yes, there is a trade deficit with the EU, but the figures are really quite striking. Goods exports to the EU were worth last year about £150 billion, as compared to goods export to non-EU countries, which are about £145 billion. And our top export trading partners are the US, but also Germany, Netherlands, France, Ireland, and then China. So there's cost. There's cost in terms of loss of trading goods, but there are also more indirect and unforeseen costs. Costs in terms of loss of investment in research, development, innovation. The Society for Motor Manufacturing says that Europe is fundamental to the success of the UK automotive industry. And they argue that this sector employs 700,000 people and accounts for 3% of GDP. And the reason why companies like the UK being in the EU is first because there is a single regulatory regime being laid down by the European Union in respect to a lot of these important goods. And secondly, they like the clout of the EU in negotiating agreements with non-member states. So looking at that from two perspectives, first of all, looking at it in respect to trade with the EU is the world's largest economy. Population of 500 million, a lot of people there with money to spend and to spend on British goods. And even if the UK were to leave the EU, if the EU is one of our principal trading partners, the UK will have to comply with all of the regulation that the EU lays down, but without having been involved in the negotiating process that got you there in the first place. In respect of trade outside the EU, the UK does benefit from the EU's negotiating strength. And at the moment, the EU has about 50 or so trade agreements with non-EU member states. Brexit would mean that the UK would lose the benefit of those trade deals. It would have to negotiate each deal independently. And where's the interest for those states? It's not negotiating with a big, heavyweight trading partner, the EU, but with small UK on its own. So goods is one area, perhaps less controversial than persons. And as we've already seen from the Daily Express, the free movement of persons is the vexed area. And for those in favour of Brexit, the argument would be Brexit would mean that we could take back control over our own borders. So we could limit the number of people coming into this country. But let's just have a look at the figures for last year. Last year, 624,000 people immigrated to the UK, a figure up from 530,000 in the previous year. But the majority of those 624,000, namely 292,000, came from outside the EU. 251,000 people moved to Britain under the EU rules, over which at present we have no control. But in respect of the non-EU migrants, we do have much greater control, and still a large number, we've seen nearly 300,000 come from outside the EU. So actually just withdrawing from the EU will not necessarily address concerns expressed in some quarters about immigration. But let's look now at three specific situations, three groups of people who would be directly affected by Brexit. First group would be those EU migrants who are currently legally living and working in the UK. What will happen to them if there's a Brexit? Perhaps a special deal is entered into. It's not clear, their position is uncertain. Secondly, what about Britons wanting to go and work in other EU countries? People going on holiday, France, Spain, Italy, our favourite holiday destinations. At the moment, we take for granted the fact that we can go to another EU state, there are no visa restrictions, we have the right to move, the right to reside. If we get sick, we can get emergency health care for free using the European Health Insurance Card. We even get reduced roaming costs on our mobile phones. All of this would disappear. And what about the third group? What about those expat Britons who are already living in other member states, who are living and working, who are retired in the south of Spain and enjoying the weather and the good food? They would also potentially lose their right to reside under EU law. They wouldn't enjoy the rights of equal treatment in respect of their capital under EU law. They would have no right to work. They would have no right to access benefits under EU law. So there will be costs for a number of people. So yes, the Brexit would mean that the UK would be able to have much greater control over its borders. But there are a couple of factors that should also be borne in mind. First, that as the UCL study has shown, EU immigrants pay more in taxes than they receive in benefits. Indeed, they estimate that EU immigrants make a net fiscal contribution of about 20 billion to the UK's economy. And that's not altogether surprising. They are young, they are working, they are paying, they're not drawing pensions. Eurosceptics also claim that Brexit will reduce immigration, but in fact, as we know, and as the figures already show, immigration is largely driven by economic growth and labour demand. And there will be a demand for young workers because we have an ageing population. And who is going to be doing the caring for those elderly people? With an economy that's growing, there will be a demand for labour, and some of that labour will be coming from other member states. So we've talked about goods, we've talked about persons. What about free movement of services? In respect of services, many large international companies are based in the UK and then provide services to other member states. And they use the UK as their base to serve the other EU states, complying with a single set of regulatory standards. And a number of large international companies, Goldman Sachs, Nissan, Siemens, they have all suggested that they will relocate to another hub within the EU, perhaps Ireland, if the UK were to leave the European Union. And clearly that would lead to a significant loss of investment and jobs in the UK. 37% of financial services companies have said they would be very likely or fairly likely to relocate their staff if the UK left the single market. Now, we know that free movement of services does not work perfectly in the EU at present. But it is at present, at least, there are levers at EU level in which to ensure that services can be provided in other member states. And finally, there's free movement of capital. Brexit will have a significant impact on free movement of capital. At the moment, the UK is attractive to direct foreign investment because it offers access to a very large market, as we've seen, of 500 million people. At the moment, tariff-free access, and about a third of foreign investment comes from overseas banks and other financial services institutions. Now, with Brexit, there will be a significant possibility of reduced financial investment in the UK. Now, specifically in the field of capital, free movement of capital is different to other freedoms because it does apply to capital coming from third countries. But there are more extensive exceptions and limitations in respect of capital coming from third countries. So we know that there will be an impact at that level. So far I've looked at pure Brexit with nothing else put in its place. Now, some people say, well, okay, we can have Brexit and then we can re-engage with the EU in a different capacity. And there are various suggestions about that different capacity. And one of the suggestions is to do a Norway, and the second is to do a Switzerland. And those are the two I'm going to look at briefly. Now, as far as doing a Norway, what that means, in fact, is joining the European Free Trade Association and then signing up to the European Economic Area Agreement. And that would indeed give us unrestricted access to the single market in certain areas, but at the price of having to comply with all EU regulations, which of course we would not have been involved in negotiating. We would have observer status, but we wouldn't have a role in negotiating their substance. We would have no power to weigh in or negotiate trade policy. We would not be part of the Common Agricultural Policy or the Common Fisheries Policy, so our agricultural products going to the EU might face tariffs. And the administrative costs of working out which tariffs apply will be high. Rules of origin will be difficult to apply. And as far as EFTA countries are concerned, they do contribute to the EU. Norway is the 10th highest contributor to the EU. It makes contribution about the same as a medium-sized country. So there is a risk for the UK, that if we were to go down the Norway route, we would have some of the benefits, but quite a lot of the disadvantages. What about the Swiss solution? The Swiss solution is based on a number of bilateral agreements between the EU and Switzerland. And access to the single market would be limited to those areas where agreement has been reached. And of course, if there is an agreement, the UK would enjoy access to the single market, but subject again to regulations laid down by the EU over which we would have no say. But those bilateral agreements, it's likely, would include free movement of persons, because it's very difficult to conceive of the Commission accepting free movement of goods and free movement of services, but not free movement of persons, which is, of course, one of the areas where the UK, those advocating Brexit, would most like to disassociate itself with the EU. And in fact, it causes all sorts of uncertainty with these sorts of negotiations. The Switzerland has not been able to secure a deal for trade and services, even though it's in the EU's interest to have a deal with Switzerland over services, and we may well discover that the EU is less malleable than we might think. So in conclusion, Brexit comes with a cost. It comes with a cost about losing access to the market. It comes with a cost about the fact that all of our integration so far will have to be unravelled in some form. There'll be a period of considerable uncertainty. It's not clear which of the regulations the UK government would renounce, because it's worth bearing in mind that when the EU legislates, it legislates for good reasons, to protect the environment, to protect the consumer. A lot of these interests are interests that the UK government, of whatever colour, would share. And so it may be that EU so-called red tape is replaced by British red tape, which will come with a significant cost. So as I say, Brexit is not a cost-free solution, and any decision to leave the European Union does require quite a lot of serious thought.